Welcome to a new analysis of Tradomics focused on Roche, one of the key major players in the pharmaceutical industry. To analyze the stock trend, we're going to use, as always, the T cycle analysis, a methodology that is based on cycle and their duration to predict in a statistical mathematical way the future direction of the price. Within the methodology, you can find also the swing trading and the volume profiling. And if you want to know more, or if you wanted to start knowing more about this methodology, you can click on the pop-up banner on the right-hand side. Regarding the what has happened to Roche and how we can predict the future direction of the price for the next weeks, we have to step back a little bit. With this law occurred on the 22nd of June 2022, in which we have had a downward yearly cycle that ended on this low after a total duration of 197 days. 197 days, it's a duration that is really close to a minimal duration of a nearly downward cycle, but also upward cycle, one nearly cycle. In which the duration is encompassed between 190 days and 338 days. This cycle has been negative because the low in which it ended was lower compared to the low in which it started. We have had subsequently another negative downward yearly cycle with a total duration of 219 days. Now, we always have to not just study the downward cycles, but also the upward cycles that are giving us additional information on where we are at any point in time of the chart and how we can consider the forecasting of the projection of the price. So first of all, we have to start with this top, and the upward cycle are cycles that are connecting tops with other tops or heights with other heights. We have had a nearly upward cycle that has lasted 279 days. The 279 days has been divided through the Matryoshka effect in the first T plus 4 or 6-month cycle and the second T plus 4 or 6-month cycle. Each of the cycles can be, of course, subsegmented into shorter cycles. Also, not just on a overnight vision, but also on an intraday vision. Of course, here I report from the weekly to the yearly cycles, but in the intraday session, we have also half days or daily cycles or even hourly cycles. From this top occurred on the 22nd of May 2023, we have a new yearly upward cycle that has been divided in the first T plus 4 6-month cycle and another T plus 4 6-month cycle. What is interesting is that this first T plus 4 cycle has elapsed 157 days. But the second T plus 4 has arrived at a total duration of 107 days. But within this T plus 4, now let's focus more on the sub cycles, because here is where the interesting information is. So from this law, we have a new T plus 5 yearly downward cycle that has been divided in this T plus 3, and now we are experiencing a second T plus 3. But what is important is that if we are analyzing the upward cycles, we have T plus 3 are 3-month cycles that can be segmented either until here with 49 days or even up to this top, so 76 days. We have the possibility to have a t+3 in both cases, but what is important to note is that with this top, we broken up the top in which the t+4 has started. This means if you follow the introduction to the T-cycle analysis, that the extension of the remaining time of this second t+4 will be further to the tops. Because once the cycle is broken, then the residual duration of the cycle, whether this is a t+4, a t+t, or t+2, doesn't matter, will seek further tops. So we'll seek an higher price compared to the price in which the critical swing from which it started was broken. Now we have to understand, and this is the critical point, whether the t+3 was born either here or here. Given that we have a doubt, because we have in both cases the possibility to have a t+3, let's subsegment the t+3 in t+2. Now, if we consider that here we have a t+3, that this is the first t+2, and we have now the second t+2. With this second t+2, the total duration has been of 31 days. 31 days is a median duration between 24 and 44 days. This means that we have still time to proceed the rally or proceed the upside trend or the uptrend until 44 days. So we can keep rising until at most the 26th of June 2024. This is the first important information. The second important information is if we subsegment further the cycles, we have a first t+1 ended after 17 days, and from this top we have another t+1. So this t+1 has reached a total duration of 14 days, but we can further extend the uptrend until 23 days. And if we further extend the trend up to 23 days, at most we can go up until Thursday, 20th of June 2024. So this is how the methodology works. But basically what is important in this analysis is that we can foresee the extension of the rally for the next month and even over, because this t+4 can last until 168 days. So 168 days can last until the 3rd of September 2024. We always have also to check the total duration. Let's see if the total duration of the yearly upward cycle can be extended. Of course, yes. So we can have room for completing this cycle until the 20th of February 2024, excluding Bayertongs. But that's what the situation is at the moment. If we have a t+3 from this top, we can extend the rally until 49 days. So we can extend the rally until the 3rd of July. In the other case, if the t+3 is here, then we have already sufficient time to close the t+3 and then have a retracement. But also, if we look more from a cycle perspective, given that this t+4 has been broken, the first t+4 has had a duration 157 days. So we expect further rise to the upside, and we have had also here nice push toward the upside after the touch of the moving average 200 period. So this is the situation at the moment. We can further proceed to extend the rally, and what is important here with this channel is that you will be always aware on how long the rally can keep let's say moving to the upside or to the downside according to the duration that we have here. So thanks for watching, and see you to the next episode.